And welcome back. It is September 1st of the time of filming. My name is George Philbeck. This is my talented and beautiful wife, Jacquie Sosa Philbeck, and we're here to give you the September update for the greater Central Florida market. And in doing this, we used single-family homes in Orange, Seminole, Osceola, and Lake County. Now, that doesn't mean that the other counties are not relevant, not at all. We're just trying to be very consistent. We've got a 2-year running history, so let's jump right in. The first thing we're going to do is let's go to the graph. Okay, what you're looking at is a graph from February 2021 up through August 2023. These are the number of homes sold in those 4 counties we spoke of. And currently, the number of homes sold, as we expect in August, has dropped a little bit. In September, we should see that drop go down a little bit further. We're down to 1,436 homes sold in the month of August. Well, let's go back. Let's go to August 2022, where we sold 2,180 homes. And even August 2021, where it was 2,873 homes. We see this drop off a little bit from August to September. We've seen that twice. 1,436 homes is down substantially year over year, and that's a concern that we definitely have. That's going to be explained by the interest rates. We're going to cover that in just a couple seconds. Right now, let's go to our average sale prices. Let's go back to the big boards. We'll take a look at that. And now we're looking at our average sale price, and this goes from February of 2021 through August of 2023, as do all the graphs in today's presentation. What I'm most concerned with is August and July, the last 2 months. In July, we had $464,000 at our average sale price, and we're down to $462,475. There's a slight drop in the actual price of the homes, but it's not substantial. We're still in what is a pretty stable market when you consider home pricings. Something else I want to show you. This is according to Redfin. The total worth of U.S. homes hit a record $47 trillion in June as scarcity of homes for sale propped up the values. Here's a fun fact for you. Of the top 50 metropolitan areas, 4 of those cities, which is Dallas, Houston, El Paso, and our own Orlando, have the lowest supply of available homes. Let's take a look at something else. This is another article from Redfin, and it covers the Miami home prices. The median home sale price in Miami rose 17% from a year earlier during the 4 weeks ending August 27th, the biggest increase the metro area has seen since September of 2022. And that's also the biggest increase of the 50 most populous metros. Remember, I was just talking about the one that has the least amount of inventory. I'm glad we're not the one that rises the least or the highest price, because this can create kind of a house of cards. So I'm really happy we're not living in Miami. I love the idea that we're still going up in price, and if they've gone up, that's great, but you got to be careful. That could be an issue. Let's go back to the article. Price declines in just 6 metros, half of them in Texas: Austin, Phoenix, Portland, Oregon, Fort Worth, Las Vegas, and San Antonio. Now, San Antonio has the smallest supply of inventory, but they're also having a price decrease, which means to me, that would indicate to me that they're a little bit on the high side. All right, let's go to our next topic, and that is days on market. The number of days it takes from a property to go from listed to actually receiving a contract and then closing. And this is a number I expect is going to go up a little bit. We still have incredible demand, but we do not have at this point an incredible amount of supply. It's going to come around, and we'll cover that when we get to the interest rate section, because I've got some good news coming for you. But back on this graph right now, we've seen it go from July at 37 days till contract. In August, that jumped up to 39 days. Now, if you're going back into the graph, you kind of look at May and June and July of 2022, this area we're highlighting right now, you'll notice we had almost no inventory at that time. And that was due to the fact we had incredibly low interest rates. Everybody wanted to buy or relocate or find a dream home. And we had a lot of buying and selling going on. That's slowed down. We saw that with the number of sold homes down to 1,436. We're also seeing now that our days on market is rising. And historically, looking back at this graph, you're going to notice that the days on market increases in September, October, November, and December, and even into January. And we've seen that in 2022 and the beginning of 2023. We're getting to that time of year where we are going to have more time on market. Now, I have another article I want to share with you. This is from Zillow, and they bring a lot of data together. There's some things that their estimates are not good. They're horrible. However, they do bring a lot of information together as far as having a broad look at the market. So Zillow wrote earlier this week, Zillow revised its forecast of U.S. home prices upward, with the typical home value predicted to rise 6.5% from July of 2023 up through July of 2024. Tight inventory conditions continue to place upward pressure on prices, according to a Zillow report. Now, I think that the prices will go up, but I don't think they'll go up that much, particularly in the greater Orlando area. And here's why. As interest rates come down, that's our next topic. We're going to cover that in just a second. I expect to see we'll have more homes on the market. More buyers are interested in purchasing homes. We're going to have a very robust market. I think the prices will continue to rise, but I don't think they're going to shoot through the roof. I sure don't hope we're going to turn into a Miami, because that would really be kind of a bad thing for it to happen. All right, let's go to the interest rates and take a look at the board. Okay, if you look at nothing else, we go right to August of 2023. The interest rates are 7.6%. I want you all to know that to get those interest rates, I took a $300,000 mortgage. I had the person have a 740s credit score, and they put 20% down. Now, if they had a lower credit score, their interest rates could go as far as 6.9%. So having great credit is very important. If you're going to buy a home, please work on it. If you own a home and you're going to sell and you're going to buy, make sure your credit's good. The easy way to knock that down a whole lot is have your credit cards as low as possible based on the total amount you can borrow. Here's my quick tip. If you can borrow $10,000, you want to keep your credit cards at no more than around $2,000 maximum. If you can pay them off every month, that's terrific. But really, the amount you have on there when they check is going to be what's most important. How much available credit do you have? Have you maxed yourself out? That'll help your credits greatly. Back to the board. We have seen these interest rates continue to go up, and it is a slippery slope. However, I think I've got some pretty good news coming, so I want to read an article for you that I was reading yesterday, and I thought it was important to share. This is another article from Redfin, and I will read it. Despite the fact that promising inflation data has led to expectations that the Fed will cut interest rates soon, mortgage rates remain above 7%. We know that. That's because the 10-year Treasury yield is high, which generally means mortgage rates are high too. The daily average mortgage rates have hit 7.26%, their highest level since October, driving mortgage purchase applications down to their lowest level since October. That's because despite promising inflation data, the expectations of the Fed cutting interest rates next year, two other economic factors are counteracting the impact of encouraging inflation news and pushing the 10-year Treasury yield up. And when the 10-year Treasury yield is high, like it is right now, mortgage rates generally remain high too. First, investors are increasingly worried that the U.S. government has taken too much debt. The second is relating to long-term expectations about the level of interest rates that the Fed would need to maintain to neither stimulate nor slow the economy. This is known as a real neutral rate of interest, or an R-star in economic jargon. After the financial crisis, the R-star was widely thought to have fallen, explaining why we had that long period of low interest rates and inflations. Post-pandemic, researchers show that the R-star might be rising. So there's concern about, have we borrowed too much money? Are we too much in debt? This is the government, and that's where the challenge is. I still believe very strongly that we're going to see these interest rates coming down, and we don't really have an option to do so, and here's why. The interest rates, as high as they are, if they maintain their elevation, we run into a problem that going into next year, we're going to have a pretty shaky economy. My prediction is the Fed will not do anything at mid-month here when they have an opportunity. They're going to have another meeting. I don't think they'll raise the interest rates. And in fact, I think in their November meeting, I think they're actually going to drop the interest rates a quarter basis point. That will stimulate. Those are two positive messages that will be sent out. We're going to find out in a couple of days. By the way, just a footnote before we get to the last one, which is affordability. If you are interested in finding out what your true value is, something that's really kind of about your community, because real estate's a micro market. We're talking about greater Orlando, but there are different pockets in this that are going to have different forecasts. If you want to know about what your value of your property is and really get a full report on it, feel free. There's a link down below. You can just give me your home's address, your name, and your email, and I'll put one together for you and create it. Be similar to what we're doing here. There's actually a video at the end that explains exactly what that looks like, so stick around. And obviously, if you like this kind of information, you want this, hit the like and subscribe button. It means the world to Jackie and I. It shows that we're doing something that's of value, and that way you'll get notified when these come out, which is usually the first of each month. One more thing I did want to share while we're still talking about this. This is another Redfin article, and I think it really does tell a pretty good story. This morning's report on consumer prices came in exactly in line with expectations. The consumer price index rose 0.2 month over month in July for both headline inflation and core inflation. That's the same increase we saw in June, which I interpret as continuing good news on inflation. Based on the July data so far released in August, it's hard to see another rate hike from the Fed in their September meeting. That is big data saying exactly what we've been talking about for a while. I hope we're right. Okay, let's go to affordability. Here is the big deal. Anything over 50% is bad. Now, I have to caveat that, and it's important that you know that for this graph, what I did is I took the average household income of $100,000 to create the affordability. If you're making more, affordability is less. If you're making less, affordability is more. I wanted to have a basis that we can use across all platforms. So it is $100,000. But at that point, anything over 50 means that more than 50% of your income is contributed in this calculation to your mortgage based on our average sale price and our current interest rates. And that's principal, interest, tax and insurance. What is your payments on there? And what's your affordability index? Anything over 50, you're not going to get a loan. So we're still priced a little bit over what the market can bear as a whole. We use that as an indicator. Looking at the graph now, you notice that we've been over 50 really since March of 2023, and we're pretty darn close in February. These interest rates, as high as they are affecting our affordability. We just heard that we're going to probably not see a rise in interest rates. I believe that in September. Really good sign. And I expect we'll actually see a quarter basis point drop. Now, of course, we are looking at the Treasury bonds. Those are really the indicators of what the mortgage rate's going to do. I think that we've got inflation under control as long as we don't do any more stimuluses and print more money, which puts more debt burden on us. We should be okay. We are going into an election year, and historically, although they shouldn't be tied, every time we go into an election year, I mean, for the last 50 years, the economy's always gotten better. So that's in our side as well. If you're thinking of selling your home, there's barely any competition right now. You might want to consider doing so. It's pretty high up on the market. I think it'll be fine going forward as well. If you're going to buy a home, remember, you are not marrying the rate. You're marrying the home. You are dating the rate. We will do a refi, a guaranteed refi, probably the beginning of this year, 2024, let's say by June. I expect we're going to see the rates at somewhere in the fives, which I would refi all day. I wouldn't spend money on the points. That's my recommendation when Jackie and I are, and we're looking for another property right now. When we're buying a home, we're not going to put the points down. We're not going to pay the points. We take the flat interest rate, whatever it is, because the truth of the matter is buying down the points doesn't make a whole lot of sense. You might want to consider doing a 2-1 buy down. That's very reasonable. It can be done, and that's a good strategy to put into play because it does buy you down for a couple, and then you can refi out, and it's nowhere near as burdensome on there. There's a lot of options. Explore them. If you need to reach out to us, we're easy to find. Our phone number is right up on the top of our, or it's in the comments, actually, we're dropping in there. And there's a form down below. If you fill that out, it will help me, and I will put a value together on your home. Have an amazing day for myself, and even more importantly, from Jackie. We're here to help. Anything you need. Bye now. So the reports that we create for our friends and our family include obviously the information about the home as well as the current estimated value as you're seeing on these 2 pages. Now we also go a lot deeper into home facts and the extended home facts as well. And this allows us to really refine our value. And you'll actually see that the last page we're going to talk about is the refined home value, which includes some adjustments that would be made as well. Now, this is a 81-page report that will be sent to you that is very specific to your home, your community, and everything else. It is important that you have all the facts when making such an important decision.